Good afternoon, it is Friday, and yeah, the weather outside is sunny, so let's see if it will be sunny as well at the stock exchanges. We will have non-farm payrolls today, again, some numbers from the job and labor market, and it will be interesting to see if we get new indications for this incoming recession. So let's start with the numbers first today and see what the market is expecting here. For the non-farm payrolls, the expectation is set at 180k, and the previous number was 236k. So we already see a slowdown here in non-farm payrolls. And if the number is lower than expected, and on top the average hourly earnings will be higher than expected, so above 0.3%, then we have more signs of the recession and the market will drop hard. Especially when the unemployment rate is going to higher levels, average hourly earnings are at high levels, and non-farm payrolls lower than expected. So let's see if this is coming. But the market right now is still positive. So Nasdaq is up, as we can see. We closed yesterday before the Apple earnings here at 13,050 points. And now we are at 13,125 points. So 75 points higher than the closing yesterday. You see that the previous high points was acting as a support this morning at 9 a.m. my time when the European markets opened. And now we have this resistance here above the previous 38.2% Fibonacci retracement is acting as a resistance. So let's see what the numbers will bring and in which direction the market will turn here. So the numbers from Apple were good, but like always, the outlook is the most important thing. And yeah, you see it was positive, but not as positive as the numbers were. We are up 2.4%, or what is it? Yeah, 2.2% right now from the closing of yesterday. But you still see Apple is in an uptrend, so it's making higher lows, higher highs. So it will be interesting to see if we can break this resistance here at $171 today, or if it will be rejected again and then make new lows and lower lows. So this could be the first sign of a turnaround here for Apple. Then we have Euro US dollar is making lows here today, so I'm waiting for the break of the 110. We tried yesterday, but then we went back up again, but you see making lower highs, so it's in a downtrend here overall. You can also see on a daily time frame. So I'm waiting to retest 109.50 and then break this level and go to the next stage here, 108.60. This is my main target for my short position I have in Euro US dollar, opened on Wednesday evening when the interest rate was announced. Crude oil is really interesting today because look at this candle from yesterday with this huge wick. We talked about it in the live stream yesterday, and now we see the pushback. This is exactly what I wanted to see. I just was a little bit early with my position here. I entered a short put position with the $53 strike expiring in July, August, and here now we see the comeback. So minimum target would be $72, but we can also go back to $74, and I'm already in the green with my short put position here. What else is interesting? Yeah, natural gas is really interesting right now. We are still trading lower here, made lows of $2.03 today, so probably retest the $2 level soon, and then it will be interesting if we can hold the line here or if we will make lower lows and probably see levels around $1.80. Still on my watch list, still waiting here for a nice entry level. Regional banking ETF. So we made lows yesterday of $34.52 but closed at $36, and pre-market we are already trading at $37.70, so we are about to close this open gap here, and you see high implied volatility. So it is interesting to sell some options because you can get nice premium. But of course, it is still risky because the small and regional banks still have problems and are trading lower, especially if we look at PacWest. So PacWest was trading at the lowest yesterday of $2.48. It's at $3.90 right now. High implied volatility. Look at this, 550% implied volatility yesterday. Yeah, it is a high risk stock here. It went lower on Wednesday after the market closed here from 650 to lows of 250. And the same for other regional and smaller stocks. Like here, we see that this was a stock or a bank which wanted to merge with another bank, and then they said no, it's not possible anymore. We're already waiting for a green light for more than 2 years, so we stopped this merger now, and then the bank dropped from $15 to $9 here. The same for Western Alliance. So yesterday we had several trading halls here. Then there was the rumor that this bank wants to sell itself to investors or other banks, and then they came out with the news, no, this is fake news, we don't want to sell anything. And the stock jumped back to $18, and yeah, was trading higher back to $23 but closed at $18. So a lot of volatility here as well. You can see more than 400% implied volatility in the option market for Western Alliance. Yeah, it's just crazy. While First Republic is trading as a penny stock, ended the day yesterday at 31 cents on pink sheets. And it will be interesting which one will be the next, which is delisted and sold to another bank for almost nothing, like First Republic was sold to JP Morgan. So now let's see the news and prepare for this. In about 3 minutes we will have the news, and let's see the expectation for the next Federal Reserve meeting first. 98% expectancy for no change at the next Federal Reserve meeting in 40 days. It was completely different yesterday around the closing. There we had about 20% expectancy for lower interest rates, and especially here for the next Federal Reserve meetings we already saw big probabilities here, high chances for lower interest rates, especially for the end of the year. But it shifted back, as you can see, almost no change for the next meeting here in June, then 50% probability for July to stay there, and then lower interest rate levels in September, ending the year at 4.5%. So the market is not trusting the story of Jerome Powell for high interest rates until year's end. Let's see what the non-farm payrolls will indicate us here. So let's go to a 1 minute time frame for Nasdaq to see the movement of the market in 1 minute. Yeah, gold as well will make some moves. We will look right at it after the news. So it will be interesting if I will get a new chance to re-enter some shorts. I closed some shorts yesterday at 13,005 points, and the low was 13,001 point. So it was a pretty nice level to close out some shorts. I still have a huge position, but I want to get into more new shorts at higher levels, maybe around 13,200 points. Let's see. Positive reaction here on the news or right before the news. Still have 3 seconds left, and the news are out, and it's a negative reaction. So the first move, often the false one. We see non-farm payrolls, a lot higher than expected. So it's a strong labor market here, even higher than the previous monthly number, but average hourly earnings 0.5 percentage point. So again, higher than expected. And yeah, this will cause the market to shift back the expectancies to higher interest rate levels for sure here. Yeah, really high numbers. Unemployment rate dropped instead of going to higher levels, 3.4 instead of 3.6%. So still a strong job market here. This is not what the market wants to see. So unfortunately for me, no chance to re-enter at higher levels or short. But yeah, if it's dropping, it's perfect because I still have a big position here in short Nasdaq futures. But maybe I will get a second chance here to re-enter at higher levels. Let's just wait and see. So let's see on a higher time frame. Still some room to retest the pre-market lows here and the closing of yesterday. And you see the lows of yesterday were right at the Fibonacci level. We were talking about the 13,000 level yesterday during the live stream, and you see the low point was 13,001.75 points. And I closed at 13,005 points. Some shorts, and want to re-enter. Maybe here, 13,225. But maybe we will not have, or the bulls will not have enough power to bring back the prices up there. But you never know. Let's just wait and see what will happen there. Let's have a look at the gold prices first. Where is the gold? Too many open charts here. Come on, where's gold? Here. So gold is dropping right now, like the market. Yeah, a strong job market. And fear in the stock market is producing the gold price to drop. So we had high points yesterday, you see, around midnight my time at $2,085. Then a lower high here, 1 hour after the opening of the stock market, $2,068. A lower high point here during the Asian session. And yeah, when the European markets opened, again, there was a sell-off. And now with the non-farm payrolls, again, a sell-off. So this is like expected. I told you maybe we can see a pushback to 2,100 if there is fear in the market with the banking crisis. But overall, over the next couple of weeks or months, I expect the gold price to go to lower levels because of a recession. So next target here, we can draw some Fibonacci levels. So let's just draw some Fibonacci rejection lines. If you use the whole movement from previous October, then you see the next important level is here, $1,986. This is the first Fibonacci retracement, 23.6%. And you see this was a bigger support on a weekly time frame, and it was a previous high point. So this one will be important for sure, as well as the psychological 2000. But we have often traded around this level. A lot of stop losses will probably sit there or right below here. And therefore, if we break this area, then probably there will be more sell-off to the downside. For now, it's still looking positive on a weekly time frame. But you see, this was a previous high point. And it will be difficult to reach the previous highs at $2,170 from July 2022. So therefore, yeah, let's see what the market is doing here. But I'm not really bullish for gold in the next weeks. No, gold is never going up in a recession. It's always going to the downside. I can show you back in 2008. So a lot of people are believing in gold as something which keeps its value in a crisis, but that's not happening. It's just if there's a small fear, like here with the banking crisis. But if you look on a longer time frame and you look on a big crisis, stock market crisis like 2000 here, 2000, you see it can be seen. We were at about $320 and went to lows of $260. So gold went down in the 2000 and 2001 when the stock market pulled back. Yes, it indicated early that there will be an uptrend again. So the stock market found its low in 2003, but the gold prices were already making new highs in 2002 and 2003. But here the same in 2008. So we had high points right above $1,000, $1,030, and then we went to lows of below $700. So we lost more than 30% during the banking crisis and housing market crisis 2008. And the same here during 2011 when we had the euro crisis here. So at first the gold price rallied. Yeah, look at this, in just 2 months there was from 1,500 up to 1,900. But then there was this big crash here. So if there is a real fear, then at first we see a rally, but in a recession the gold price is pulling to lower levels. And you see what happened in the next 2 years. So we went to lower levels and we found a low here at the end in 2015 at $1,045. So this was about a 40-45% drop here. So that's heavy. And then we went to higher levels during 2020 with all the cheap money. So especially with the projected high inflation, which we now see, the gold price was rallying early and made new highs here. Then in 2022, again, we had the same high point and were rejected from there. And you see that the stock market went lower in 2022 and the gold price as well. But since October, since the stock market is going to higher levels again, gold is rallying because we still have a high inflation. But now the problem is the high interest rate level. And this will bring, for a third time, gold prices to lower levels. And I don't believe that we will have a big chance to go to higher levels here. Maybe if we see a fear coming up in the banking crisis, but then as soon as we see the signs of recession, gold should dip again. And therefore, I would be rather in a short than in a long position for gold here. Okay, yeah, and gold pays no dividends. Therefore, you have high opportunity costs in this high interest rate times like today. So we made lows here at 13,087 points. Still weak. Went back to the VWAP level, as you can see, reacted there as a resistance. But it's clearly negative. Even if the market wants to pull back, I would short above these levels. So day high right here at the news. But if we go to higher levels, 13,200 and above are shorting levels for me. So look here, during the interest rate decision, we made high points at 13,310 points. So there the air will get thinner and I want to short here if we can manage to go back there. But on a Friday like this, everything is possible. So the first movement is often the false one. Therefore, we can still go to higher levels and then see a full reversal there, up there. Okay, then let's move on with wheat. Wheat prices are pulling higher here today, 0.6%. So it's perfect for my position. Yeah, it's slowing down a little bit, but again, we still have about 10 days until we see the Russians talking again with the Western Alliance about the exports for wheat from the Ukrainian havens, and therefore I think this movement will speed up here and go back to 700 cents for wheat futures. Still staying in my position here and profiting from this movement. Then we have some stocks here. So let's see the two stocks I have positions in. Tesla, no big movements, again, just sideways yesterday. Let's see what will happen today here. And more interesting was Nvidia. Nvidia was pulling down. So yeah, it will be interesting as soon as we reach these 260 area, and if we can trade lower, then for sure we will see a sell-off there. So we managed to go outside of this sideways trading range here for just 1 day, but it was immediately sold off, and therefore it will probably sell off and retest here the $260 again, bounce back a little bit, and then on the next attempt sell below the $260. And this will be the trigger for more shorts to come in Nvidia, and I can profit with my 230 strike long put. Let's see Apple pre-market. After the earnings yesterday, we made highs here of $171.47. So if we come back into this area, it's a nice short area, because you see there was also a high point on Wednesday. So it is a nice shorting level, $171. If it is reached and the Nasdaq is reaching 13,225 points, then I would short it right here. $171 is a nice short level for Apple. Even if the numbers were good overall, the economic downtrend will bring some problems here for Apple, and therefore the stock can also tank to the downside, even if it's still in an uptrend. Some more commodities, orange juice just sideways, the same for sugar. Sugar uptrending again. So really glad that I closed my short call position 2 days ago at almost the best point of the day. And yeah, just waiting if we see a double top here or a breakout to the upside, and still waiting for a re-entry here in short futures. But yeah, first wait for some signs of weakness here for the sugar prices. The bonds, so TLT ETF is still moving sideways, dropping a little bit yesterday and today. So again, we see lower expected interest rates, and yeah, we will see if this will affect TLT ETF and if it will move to higher levels again. But as long as the market or Jerome Powell is expecting high interest rate levels, the TLT ETF is dropping here. What else is interesting? Wix, yeah. Wix was at high points yesterday of 21.33 and now is dropping back to 18.5 after the Apple earnings, because they were good. We have less fear in the market and therefore Nasdaq was up. But for sure, I believe that more fear will come if we see bad news from the banking sector, and therefore we will soon be above 20 again. And yeah, maybe even retest the 24-25 area here, and the previous high points at 30.8 can be reached pretty quick if the fear is coming back into the market. I still have an open long position in Wix. It's a back spread, a ratio back spread in Wix with a 13 strike short call and a 22 strike long call. So I will profit if the fear is coming back into the market here. So let's look at ES future. ES is going to higher levels, so this support is holding for now. This was a previous low point, and well, we went a little bit lower yesterday, 4,062 points. Previous low point was 4,068 points, so we went lower just by 6 points. And you see this is also a Fibonacci retracement, 38%. But now we are reaching previous low point and a resistance again. 23.6% is as well a resistance level, and 20 and 9 EMA are sitting right above at 4,125. So even if we will overshoot here, this will probably act as a resistance, and this is a nice level to short again for a possible target here of 4,025 points or even the 4,000 level. Yeah, it will probably act as a support here, 50% Fibonacci and a 200 SMA level. Okay, I think I covered all major stocks and indexes. Yeah, let's have one last look on DAX, because we went back into the sideways trading phase. Even if we went to lower lows yesterday, it is going positive today, 0.8% positive territory today, back in the sideways trading. So decision is not made. Still waiting for the breakouts to the up or downside here. and still strong index here, DAX 40 in Germany. Okay, I think we covered everything important here. So I can let you trade on your own on this Friday. Hope you will have some nice weather like I have right now in Germany. It's pretty warm outside, and if no matter which direction the index is taking, I have the chance to re-enter new shorts or just to profit from my existing short position in Nasdaq. I wish you a nice start into your weekend. Hope you will have some decent profits today. Let's see us next week again. And let's start our weekend early today. Goodbye.